live. Let's see. All right, cool. I have a little bit of a new setup today. So we got a few people here. Mariana is not here to read out questions. So it is all me. All right. Boris Musheyev here, a tax advisor. Every week I go live and bring you tax strategies to help you, the business owner, save money on taxes. Now, let me know in the chat if you guys can hear me. I'm always testing the microphone, making sure it's working. Cool. Talk to me. Let me know if you can hear me. BJ says, thanks for doing these live chats. Appreciate them, of course. But really, my mission is to help as many business owners as I possibly can to help them save money on taxes. My job is to educate you. Now, when you do watch these lives and you see me answering all these questions, it's not so that you can go right now and like, all right, Boris said this, let me do this. No, I always advise if you have a profitable business, you work with a tax advisor. Things that I'm teaching you today and every day or every week on these lives is really for educational purposes, meaning the more information you have, the more power you have to make financial decisions about your taxes, okay? And then you need to be working with a professional, a tax advisor. So if you've got a profitable business, ladies and gentlemen, oh my God, you need a tax advisor. All right, we got some questions coming in here. So I'm going to be reading these questions. Let me see if I can somehow make this chat bigger so I don't have to always lean. Can't do that. Okay, so BJ says, by the way, everybody, say hello. We've got quite a few people here. Say hello in the chat. All right, cool. Let's go. BJ says, have suspended K1 with passive activity losses in 2023. This same K1 will be marked final at a loss. What happens with this loss? All right, so BJ is asking a very interesting question. Okay, so BJ says, Boris, I have a K1 with PAL. For those of you that don't know, PAL means passive activity losses. I'm assuming this is real estate losses, right, BJ? Now he says, now in 2023, this K1 will be marked as final. So what happens to my losses? So basically, what I'm assuming is going to happen in your situation, because the K1 is final, that means the property has been disposed of, that passive loss activity has been disposed of, and that means you're allowed to take these losses in a year that you do receive a final K1. Next question we have from Dave. Dave says, Augusta exemption. I've read your channel. Take it if your home office is your primary business location. Is that correct or incorrect? Almost, right? So let's clarify that. So Dave says, Boris, I looked at your channel. I downloaded a couple of materials from your channel, and it says that the home office is a primary location. So there's two things that can happen, right? First of all, you either have a location in which your business operates, not a home office, or you just work from home. If you just work from home, you automatically qualify for home office. It's your primary business location. That's it. But if you have a business location, right? So I'm just going to put physical location, and you also work from home, can your home qualify as a primary principal location, right? Or principal location? Yes, it can if you do administrative stuff from your home office, okay? So the IRS says, look, you can't have a home office. Not allowed to have a home office if you have a physical location. Can't take this deduction unless your home office qualifies what's called an administrative home office, where you need to do administrative stuff from home and your business requires you. You need to, right? So let's just take, for example, this could be really any industry. I'm just giving you an example. Let's say a restaurant owner. He works in a restaurant. He serves his customers. He doesn't really have a location, or even if he has like a desk in there, right? He doesn't do his administrative stuff. He does it at home. He speaks to his accountant. He does his bookkeeping. He does his billables. He manages his sales taxes. He manages his, he makes reports for himself. He does that at home. That would qualify for home office under the administrative rules. Next question, we've got Justin. Hello, Justin. Say hello in the chat, brother. Do you have an IRS-approved solo 401k plan eligible for Mega Door Roth IRA? So, oh, this is not Justin. I'm sorry. It's just curious. Wow. All right. So, all right. Say hello in the chat. How many people do we have joined? Everybody, say hello in the chat. Let's kick ass YouTube's algorithm. Okay. Let's keep participating. By the way, I totally forgot. I don't see Mariana is not here to help me. She usually helps me read the questions. And I don't have it here. But, oh, yes, we do have it here. I guess she prepared it before she left. All right, cool. So for anybody that participates with the most questions, I'm giving away my book, Thinking Outside the Tax Box, okay? If you participate the most, you get this book. Plus, you get the second book, S Corporation Tax Secrets book, that will be for second person. And the third giveaway that we have is a free 3-year look back. That's right. I will personally, or one of my team members, will review 3 years worth of your tax returns, and you'll be scheduled to speak with a tax advisor completely for free for 45 minutes. All you have to do, ladies and gentlemen, is just ask questions. I'm here to help you. That is it. All right. So Just Curious says, Boris, where are we? Yeah. It says, do you have an IRS approved solo 401k plan eligible for Mega Backdoor Roth IRA? Now, let's see what Just Curious is asking for, right? I'm just going to put JC here, Just Curious. Okay. So he's asking, Boris, a solo 401k, can you do a mega, what did he say? A mega backdoor Roth. Mega backdoor Roth. All right. Everybody who's on this live, pay attention, because I'm going to get into details of this, because I want to explain to everybody what Just Curious means, okay? So first of all, if you don't have a business, or even if you do have a business, you can put money away into a Roth IRA, okay? Into a Roth IRA. Roth IRA is basically you put the money in, you don't get a deduction, but when you do retire, you get a tax-free income, meaning so whatever it earned in that financial account, it's tax-free to you. Now, deductions to contributions to Roth IRA are also limited to your income. So if you get to your income thresholds and you're not allowed to put money into the Roth IRA, you can do what's called a backdoor. You can go through the back door and contribute. What that means is that you open a traditional IRA account, put away $6,500, and then you transfer the money to a Roth IRA. It's totally free. Don't get me started on it, right? It's totally free. I said free. Whew, totally legal, I mean, okay? Totally legal, okay? So don't worry about it. So now, Just Curious saying, Boris, what if I do solo 401k backdoor Roth? Now, by the way, everybody, with solo 401k, the limits for 2022, I always forget the limits. Is it 63,000 or 66,000, whatever that may be, right? So you can put away up to 60,000 and change into your solo 401k. You get a tax deduction, and when you do retire, you get the money from solo 401k, and whatever it earned you, you pay tax on it. So Just Curious is asking, is there a way we can do a backdoor Roth IRA? The reason he says mega is because it's more than $6,500. So good news for you, Just Curious. You actually can open up a solo 401k account with a financial institution. I don't endorse any money. I don't have any recommendations, but I'm sure if you do simple Google search, you can actually set up your solo 401k where a portion of it can go into Roth and more than $6,500, and another portion can go as a traditional, a tax deductible. Definitely look that up. I hope that helps. If that helps, say helps in the chat. All right, next question we got is from, all right, BJ says, hello. Jules says, love your podcast. When it comes to hiring your kids, what's the maximum income? All right, perfect. By the way, everybody, we launched a tax reduction podcast. So don't have time to watch my YouTube videos? No problem. Pop it in your car on your way to work or wherever you're traveling, on your AirPods, and listen to our tax strategy. So the podcast was just released. If you guys go do a search, and it's all on all major platforms, okay? If you do a search for tax reduction podcast, it'll come up, okay? We're currently working on getting the domain on that for that thing working as well. But if you look up on your major podcast platform, whatever you listen, iTunes or Apple or Spotify, even Audible has it, okay? It's all for free. So tax reduction podcast. Now, Jules is asking, Boris, love your podcast. She says, first of all, thank you, Jules. Second of all, she's like, how much, when it comes to hiring your kids, what's the maximum income? Well, the maximum you can write off for 2023 is $13,850. So that means that if they receive an income up to $13,850, they don't have to pay federal income taxes on it. Now, does that mean that you can't pay your kids more than $13,850? You certainly can, especially if you're in a higher bracket. Even if after $13,850, your child will pay taxes on any income over $13,850, your child will still be in a much lower bracket than you are. So definitely speak with your tax advisor to figure out, hey, how much do I need to pay my kids? Should I pay them more or not? And they actually do a lot of work for me in the office or whatever that may be. Thank you, Jules, for that question. Next question. Just Curious says hello, hello. Jules says hello. Everybody say hello in the chat. Let's kick the YouTube's algorithm, right? All right, cool. Oh, this thing jumped. All right, let's see. By the way, guys, Mariana is not here if you can't tell. I see a lot of new people joined. So if you participate by asking a lot of tax questions, which I will be gladly to give you an answer. So I'm giving away 3 things today. S Corporation Tax Secrets book. I am also giving away the Thinking Outside the Tax Box. This baby goes on Amazon for $21. It's yours. And a third and a grand prize winner is going to get 3 years worth of 3-year look back. Let me just pause my notification. Let's see. All right, cool. 3 years worth of tax returns. The tax advisor from my team is going to review your tax returns and have a 45-minute consultation with you. So the only thing you need to do is ask questions. Perfect. Let's continue. Let's see. So we had a question from Just Curious says, is exercising call options more tax efficient than selling calls? And if so, how? Please explain with an example. It's a little too much to explain for a Q&A call. Just Curious. We're going to skip this one. No hard feelings. Next one. Purchase truck in 2023 for $30,000. This is from BJ. 100% business, okay? We'll take bonus depreciation 2023 of $24,000, 80%. What happens with the $6,000 in book value in future years? BJ, why do I have a feeling you are an accountant asking all these detailed questions? Let me know in the chat and be honest, BJ. Are you an accountant? All right, cool. BJ is asking a question. Boris, by the way, it's good for everybody to know. Boris, I'm buying a car for, what did he say? $30,000. And I'm assuming it's over 6,000 pounds, right? And it says 80% I can deduct in 2023. For those of you that don't know, if you're taking a bonus depreciation in 2023, it went down from 100% to 80%. So that means any assets that qualify for bonus depreciation that used to be 100%, you can now take 80% of it only, okay? So he said, I'm going to take $24,000 as in 2023 as my deduction. What happens for the $6,000? Okay, here's the thing. The $6,000 is now going to be depreciated over the course of the 5 years, which is the regular depreciable price for the vehicle. All right, let's see. Dave says, yes, the business is registered at the home and administrative stuff done there. Can I also leverage Augusta exemption, though? So Dave is asking a piggyback question, right? He's piggybacking on his original question. He's like, Boris, yes, I have a home office, and that's the only place I do work. Okay, this is Dave. So I want to write off my home office. Can I do that? We established yes. Now he says, can I also use Augusta strategy on the same home office, on the same home, same home, not same home office, the same home? The answer is yes. Now, you want to make sure you follow all the rules of the Augusta strategy. I've released a video a couple of weeks ago about how a business got audited, an S corporation specifically, for incorrectly using and abusing Augusta tax strategy. I love that audit case because IRS didn't say, hey, you can't use this strategy. IRS said, hey, they couldn't prove us this to be able to deduct it. I was like, awesome. IRS basically gave us a blueprint how to use the strategy, which, by the way, my firm has been doing for our clients all the time. Exact same blueprint. You don't need to wait for an audit to get the blueprint. Reasonable. I mean, the expense has to be ordinary, necessary, and reasonable in nature. All right, cool. By the way, I wanted to run a thought by everyone. I wanted to get your idea. But first of all, by the way, let me know if you guys have gotten a chance to check out our podcast. We released it yesterday. It's Tax Reduction Podcast on all major platforms. Say podcast in the chat if you subscribe to my podcast. I don't care what platform it is. Let me know. Say podcast. The second thing I was going to run by everyone, and this is me doing my market research. Okay, so YouTube has this option where you can create a membership, right? I can create different membership levels for everybody to join. So I don't know how that's going to be yet, but there's a lot of people that have a lot of follow-up questions on watching my YouTube video, listening to my podcast, right? Like, oh, Boris, you talk about hiring children, or you're talking about, for example, owner distributions, but they have specific questions to their situation. So I was thinking of creating some kind of a membership through YouTube. I don't know, like $9.99 a month or $19.99 or whatever that may be. And there, and it will be, so basically if you have any specific questions about the videos that you watch on YouTube, we can answer your specific question, and will also only be available to that member. How many of you would be interested in something like that, or you think that would be a good idea? Let me know in the chat. Say would be interested. I'm just doing market research. All right, next question. Jules says, what software do you recommend for bookkeeping? So Jules, if you don't mind sharing, I probably won't be able to see it here, but let me know how big is your business, right, in terms of revenue, if you don't mind sharing. So Jules says, what software do you recommend for bookkeeping? Honestly, I'll tell you what we use, right? There's a lot of other softwares which are as equally, if not great, than QuickBooks Online. But we use QuickBooks Online for all of our clients. Now, if you are a business owner that is making more than $100,000 in gross revenue, please, I beg you, do not do your own bookkeeping, okay? Bookkeeping is complex. Regardless of what QuickBooks says, they're going to give you, self-employed version. By the way, I hate their self-employed version because it doesn't disclose balance sheet, okay? So QuickBooks Online, don't get the self-employed version, get the regular version, but you need to reconcile your books. You need to make sure your balance sheet is balanced, because it's so important. You have no idea how important is balance sheet for your taxes, especially calculating the shareholders' equity, right? The shareholders' basis. So without having any tax consequences. All right, let's continue. BJ says, hello, here to listen. Hello, yeah, hola, still Steven. Nanny, what point I can convert single member LLC to an S corporation in terms of profit margin? Great question, Nandy. All right, so we've covered this a couple of Q&As ago, but I'd love to cover it again because this comes up a lot, okay? So Nandy says, Boris, I've got an LLC. When can I become an S corporation? So contrary to a belief out there, and to what many accountants say, no, it is not a $40,000 profit, okay? It used to be that when you start making about $40,000 in profit, like you said, Nandy, in sort of profit margin, it would be a good idea to become an S corporation. After Tax Cuts and Jobs Act was passed in 2017, we've got something that's called qualified business income deduction, which means you get a 20% haircut on the net profit of your business. I'm not going to get into details of it, but when you make a $40,000 profit and you become an S corporation and you pay yourself salary, you reduce your profit, you're reducing your QBI deduction. Now, is it so bad? No. So whatever savings you get from converting to an S corporation at 40 or 50,000, those savings are going to be washed away, so to speak, by the fact that you lost quick QBI deduction, and now you have extra expenses. For example, S corporation is a separate tax return, right? 1120S. Then you have to pay and process payroll. You also have to pay state unemployment insurance. What is it? SUI, right? State unemployment insurance. And this alone comes up to about $3,000 on average in costs. Okay? So it's a lot for a small business owner making this much in profit. Now, if you're making about $80,000 in profits, that's already where you start saving a couple of $1,000s in savings. But more than 80,000, 100%, you need to become an S corporation. You also have to be careful about your state. I don't know what state you are located in, okay? But some states require, like, don't recognize S corporation election. Like, for example, I believe it's Tennessee, New York City. They actually have a corporate tax rate. So It's not always beneficial. Hope that answers your question. If it does, say it answers my question. Next, we've got BJ. BJ, I think you're the winner today. Guys, by the way, I see so many people joining. If you participate today, we're going to be raffling off today before the end of the call. I have a hard stop, by the way, at 12:40. But we're going to be raffling off Thinking Outside the Tax Box. Currently goes on Amazon for $21, online for $9, S Corporation Tax Secrets, and a 3-year free look back. The only caveat with a free look back is you have to have a business where we review your business and personal taxes, and a tax advisor will get on a call with you for the review for 45 minutes. All right. Wait, I think I missed a lot of questions. Hold on. Yes, the thing brought me. Let's see. Oh, there's a lot of questions here. All right, cool. So BJ, we've got that. Dave, Jules, what software? And Nandy, we answered. BJ, dependent kid has full tuition scholarship and qualified institution received 1090 where scholarships receive tuition. Kid pay education, housing cost. I'm not really sure about your question. Can I recognize 4,000 of other income on my daughter's 1040, thereby allowing me to take out the full 2,500? This is very technical. BJ, we're going to have to skip that. Sorry about that. Let's see. Just curious. You asked me basically to try to imagine a 1040 in my head. Sorry, can't do that right now. We've got a lot of questions. We love you, though. We love you, BJ. All right. Next question. Just curious. Does employing immigrant parents' recent green cards in your business help with them with qualifying for subsidized ACA healthcare plan for Medicare? I wouldn't know that. I only can answer tax-related questions. Can't answer anything outside of that. All right. Great content. Thank you, BJ. Jay says, Boris, love your channel, man. Thank you. By the way, we released a tax reduction podcast, guys, on all major platforms. Check it out. BJ says 2 vehicles used for 100% business, landscape trucks. Okay. I maintain no mileage log. Have 3 other vehicles that are 100% personal use. Am I at risk of losing bonus depreciation deduction? 2 vehicles, 100% business. Okay. I maintain no mileage log. Have 3 other vehicles that are 100% personal use. No, I would not worry about the mileage log if the vehicles are 100% business use. Not at all, right? You want to keep mileage log when the vehicle is also personal use. Now, if it's 100% business use, you just want to make sure you show to the IRS, right? Ordinary necessary expense for the business. It's 100%, especially because it's a landscaping business. It's probably a couple of pickup trucks, right? So that becomes deductible. All right. BJ says, with Miss Mariana, give her our best. We hope she's well. Oh, she is well. She's home with our son who caught a little cold. Thank you. Technology Pro, can you write off your lunch on your business? So somebody's asking, can you write off your lunch on your business? So pay attention, everybody. This is Technology Pro. I don't know why you guys come up with these names. Technology Pro, Just Curious, BJ over there. All right, cool. So Technology Pro, I'm just going to put as TP. He says, can I write out my lunch on business? Woohoo! $1 million question. Boris, can I go get a pizza on my lunch break and write it off? The answer is no. Okay, I'm kidding. Depends, right? So first of all, sometimes business owners think, hey, I am going to work. I work for myself. I go to work. So when I eat lunch, I have to be able to write it off. The answer is no. Okay, can't do that, unfortunately. But when you are traveling overnight, you can write off your food, even if you're eating alone. Or if you are sitting down with a client, okay, you can also write off your lunch. Does that make sense? So when you say lunch for business, I'm assuming you're taking a client out, you're eating with a client, or we also order, for example, lunch for office, right? For everyone. So that becomes a business deduction as well. Let's see. BJ says I'm an accountant. Busted. BJ, I knew it. No technical questions here. All right, cool. Let's see. Locum says, just started my LLC June 2023. I made 60,000 so far. Should I transition to S Corp? I'm anticipating more income next year. When you say 60,000, profit or gross? If it's gross and after expense, you're about 40,000. I wouldn't worry about the S Corp election. I've spoke about it earlier with Nandy's question, so definitely check that out. Locum says, hello. Haven't seen the podcast. What is the name? BJ, Tax Reduction Podcast. Jay Brown says, oh, he's subscribed. Thank you, Jay. Just curious, what is the minimum age you've seen business owners employ their kids for appropriate work, of course? So that's a good question, right? And this is just curious. So she says, Boris, what's the appropriate age? Honestly, I would tell you that any age is appropriate as long as it's for proper business use. For example, I've seen a situation where a 7-year-old children were hired to do, for example, a promotional marketing materials for their business. This was an optical store, and I believe they were selling eyeglasses for children. So they had their children model with different eyeglasses and put it out in the store. That is a legitimate hiring children at 7 years of age. Now, 7 years old kid, how much paper can they shred in your office, right? So I don't know. I hope that answers your question. SIFU Wong, Sifu Wong. All right. Hi, Boris. In my S corporation, I took 27,000 in life catch up as I got 50,000 in my W2, my S corp. I know I will put in my solo 401k account. What about where do I input on my 1040 form? You guys, I think we've got a lot of accountants here, guys. No technical questions about preparing tax returns. Okay. I'm here to help business owners reduce taxes by giving tax strategies and answering tax strategy questions. No technical questions on how to fill out tax returns, please. All right, cool. Sorry, guys, Mariana is not here, so it makes it difficult for me to go through the questions. Let's see. Okay. Yeah, so just curious says, is it beneficial to transfer business assets just as a laptop vehicle when transitioning from, okay, so that is not a tax strategy question. Just curious, we're going to be skipping that. Where's my escrow? We're going to skip that. I plan to use a way for payroll processing. I don't think any thoughts on how it's okay. BJ, Erica. Okay, Kyle says, are credit card reward points converted into cash that are earned under a business considered non-taxable? All right, great. Kyle, we have a video on that. Finally, a tax strategy question, guys. Come on. No technical questions from accountants, guys, please. All right. So Kyle says, Boris, I don't know if you saw my video, Kyle. I actually did a whole video on credit card rewards. He says, are credit card reward points converted into cash that are earned under a business considered non-taxable? That is correct. That's the beauty of it, okay? So, for example, I use Capital One credit card, and they give me 2% cash back on all purchases. So, throughout the year, it pretty comes out to a significant amount, right? Few $1,000s, like $5,000-6,000 easily, right? In cash credit card rewards. I basically have Capital One mail me a check for $5,000, $6,000, whatever that is, to my home, to my personal address. I just cash it. It's completely free because these are considered rebates, and rebates are not taxable. That's what IRS considers them. So absolutely. I made a whole tax strategy video on it on my YouTube channel. Definitely check it out. I went into a lot more detail there. Let's see. Taylor says, we have an escort business in a high tax rate, wanting to move to a lower tax state. Could I set up a consulting company in a new low tax state and have the business pay almost all profits to consulting? So Taylor, that's a great question, right? So Taylor is saying, hey, Boris, I live in a high tax state. I'm assuming maybe California, Texas, right? And he says, so can I have my business, let's say this is an S corp, and set up, let's say, Nevada, right? Because people love Nevada, right? Set up a consulting business and pay consulting fee from my S corp to the snow tax state and basically avoid state taxes. Unfortunately, it's not that simple. It would have been that simple. I would have done that, right? It's not that simple. You have to pay taxes in where your, first of all, business is located and operates, which would be here, and also is the place of residence. But if you say, well, Boris, I actually do live in Nevada. We actually got a new tax advisory client yesterday whose situation is exactly this, right? He actually did move to Nevada, but the business is still in New York. he has employees in physical location, still has to pay taxes in the state of New York because that's where the business is taking place. Unless you fully move to Nevada, that's a different question. That's a great question, Taylor. So let's see. I saw Mariana's message pop up. Boris, I'm here in spirit. Mariana, these accountants over here, we got a few of them. They're like on top of me. All right, Jane. It said that EV tax credit income limit for married couples filing joint. Is that mean the income have to be at 300,000 or under? I believe so. Yes, Jane. Jay Brown says, do ever run into business niches that seem to be able to write everything off, like YouTuber or travel blogger? Curious if you have maybe 3 best write-off industries. So Jay is saying, Boris, is there such a thing that an industry where you can get into, you can write off anything like a YouTube blogger or some what do you call it? Some kind of an influencer. Look, Jay, the question really becomes, IRS is very clear about this, right? So there's a section in the IRS code that says ordinary and necessary. Like, is it ordinary for you to have such an expense, and is it necessary for you in the pursuit of the income? Like, if you're gonna do, like, if you're a YouTube blogger, right, and you're going to buy something so that you can do a vlogger, right, and you can do a video, and because that video produced you income by doing that, and you bought that certain item, then yes, ordinary, necessary, but also has to be reasonable. Okay, so you've got to really speak to your tax advisor about this. Okay, I know if you're offered health insurance, you can. So Tiffany says she's also the accountant. Guys, no questions from it. No technical questions. We're here to help business owners with their tax strategies. I think we've got a lot of accountants here today, which I appreciate you and love you all. Let's see. Okay, Jay Brown says he would be interested. Jules says she would be interested. I guess you're talking about that YouTube subscription we were talking about. All right, I think we're good with questions. Okay, Tiffany has a question. Just forego deduction, maybe. Oh, I don't know where the question is. I know if you're offered health insurance elsewhere, you cannot deduct insurance and pay through an S corp on your personal tax return. But can you still have the plan through your S corp without deduction? Yeah, you're just not going to get a deduction. All right, cool. All right, guys, I think we're going to call it an early day. I'm not sure if we have any winners today here. So yeah, today was it was tough to do this without Mariana. Maybe we're not going to be doing this without Mariana if she's not here next time. I really got my ass kicked today. I'm kidding. Okay, cool. I don't have any other questions coming in, guys. Let me know if there's any other questions. Thanks for the weekly chats. This has been all super helpful. Thank you, Dave. I don't think I missed anything. Okay. All right, guys. Thank you so much. And I guess we will be speaking next week. Now, check out the new podcast that we have, Tax Reduction Podcast, on all major platforms. Tune in here every week at Thursday at 12 p.m. Eastern Time for live Q&A. Thanks so much.